You want to turn all of your expenses that can be legally turned into deductions into deductions. Here's your number one question. How does this relate to my business? If it relates to your business, documentation is the key. Let me give you some examples. You can pay your kids $6,300 if you have kids under 18, and you don't have to pay taxes on that as long as you can think of things for them to do, including a $2,500 modeling fee would work if you put them on a website or something like that. Let me spend some time on the thing that will provide a huge rate of return for you now. You can put these things on the ground in the next 24 hours. I'll kind of build the framework inside of that, then I'll finish out the rest of the 5 levers to economic independence. So, on taxes, here's 2 things to avoid. These are the 2 biggest traps that are out there. The first one is deferring your taxes. If the government owes between $19 and $20 trillion, who thinks in the long term we're going to see taxes go down by a show of hands? Who thinks 20, 30 years from now we're going to have a lot lower tax rate than we have today? 0. Okay, 0 people. That's a concern to me. And if you decide that you're going to put money in a government qualified plan, you've just invited the worst partner into your life that exists in the world. Want to know why they're a bad partner? Because they say, okay, you put the money in, I'll be your partner, I'll take 40%, but if you get out early, I'll take 50%. And in the future, I might take a bigger percentage based upon my economic circumstance. I don't know what it's going to be, but right now I'm $20 trillion in debt. Who's ready for that partnership? Show of hands, right? That's the trap. That's the trap. Deferring taxes is not saving taxes, it's deferring taxes. Don't get caught in that trap. The second trap, early on in my financial career, before I understood what I understood today, I remember I'm a newlywed and I tell my wife, hey, we're going to get rid of your little red Infiniti car that you love, because there's this obscure thing called the Section 179 for vehicles over 5,500 pounds, where we can write it all off in 1 year on the purchase price. So we're going to buy a Chevy Tahoe, even though we don't have kids and I just work all the time, so we don't go to the mountains or anything. But it's going to be a great idea to buy a depreciating asset to save tax. See, my wife told me I was a jackass, and it turns out she was right. I just thought it was hurtful she said that. So don't borrow to consume. Don't borrow to go get a depreciating asset, but most importantly, don't let the tax tail wag the dog. It doesn't make sense to spend $1 to save 40 cents. So don't defer and don't just spend. So here's the 3 things to do around your taxes. I'm helping you navigate thousands of pages in just three-piece framework. That here's the deal. If we can save you 10, 20, 30, or a bunch of tax per year, that's the equivalent of scrimping and saving money for decades to create that same amount of cash flow. But let's do that in the next 5 minutes. You guys in? I'm going to go fast. Take down the notes. You've got to have a tax team. The first person on your tax team is a bookkeeper. The second person is a CPA. And here's the deal. It's hard to find the right CPA, but you need someone that is actually a strategist, not a filer. A tax filer doesn't help you. If you're doing multiple millions, you need a tax attorney, and if you own your own commercial building, you need an engineer. There could be up to 4 people on your tax team. Now, you want to be proactive with them, and every single quarter, get on the phone with them and have a brainstorming session. Your job is not to be bridled or limited by the tax code, but just throw crazy ideas out there and have them tell you why that could work or why it can't. Like when I went to Italy this summer for a couple months, I said, I want to write that off. He says, you can't. I'm like, okay, I'm going to have a mastermind while I'm there. I'm going to have David over. I'm going to film some things. I'm going to write a book. I just think better in Italy. I'm going to meet with my wife, and she's part of my corporation. And then all of a sudden, 50% of the trip becomes a write-off by the end of the call. Okay, so you want to brainstorm. Now, the second thing is, you want a different set of eyes on your taxes every 3 years, because if you've missed, you can go back and amend. In 2006, I had 2 business partners die in a plane crash. And I did not get proactive. I didn't talk every quarter to my tax team. I didn't get any information over to them. And I found out in 2008, I had overpaid my taxes $54,000. So instead, the government wrote me a check for once, and I got that money back. So you can amend your returns back up to 3 years. So that's part 1 of the success framework around tax. Part 2, you want to turn all of your expenses that can be legally turned into deductions into deductions. Here's your number 1 question. How does this relate to my business? If it relates to your business, documentation is the key. Let me give you some examples. You can pay your kids $6,300 if you have kids under 18, and you don't have to pay taxes on that as long as you can think of things for them to do, including a $2,500 modeling fee would work if you put them on a website or something like that. Or maybe you just have them walk out here on stage with you like Ryan did, you know? Like I've done that with my kids. So you find ways to pay them. Another thing that you could do, who here knows the Augusta rule? Well, my clients, that's weird. Oh, my clients just raised their hand, that's cool. All right, Augusta rule is a big one because if you use your home 15 days or less in the year for a business purpose, employees, vendors, clients, you can rent that out to your business. The business writes you a check. You don't have to claim that as personal income, but the business gets to write it off. So calculate that. If that's, let's just say it was $2,500 you're charging per time. If you're in Austin, you do it during South by Southwest, you charge $7,500 at that time. You do it during Austin City Limits, it's another time. You just look at what would it cost to get a hotel or what would it cost to get a banquet room, and then you charge that. There is no tax to you, but you write it off in the business. So that right there could be worth $12,000, $13,000, $14,000, $15,000 in something that simple as we talk about it today. Or even simpler things is like having a home office, you can write off half your utilities, or other simple things that you can turn expenses into deductions. For me, I set up an intellectual property company. Now that intellectual property company, part of its intention is to put things on video, which means I now buy uniforms for that. And when I'm at home, I sit in Lululemon. I don't work out and I just sit in it because it's super comfortable, And then when I'm on stage, I wear this kind of stuff, and now that's a uniform that I'm writing off. Turn your expenses into deductions. If you have a company, you need to have an annual meeting. I think better in exotic locations. So I always have my annual meeting, like at Whistler was our last one. We've done Hawaii, we've done Italy. We write that off. There's so many things, and the IRS says that the majority of you are not taking all of your tax deductions. Why? Because you might have an accountant that says they're conservative. Anyone have that accountant that says they're conservative? Here's what they're saying. I'm antiquated. I'm having you overpay your taxes because I don't know everything there is to know out there. And they scare you into thinking that that's gonna, you're gonna get in trouble and there's gonna be red flags. But a lot of this is just so freaking simple that for some reason they're not doing it. Depeche, how many things are your accountants missing, that you bring to them back in the day? So you had to go get a whole new team, right? Like it's just how it works. So the third one, and this is where you're gonna save a boatload of money, is to reclassify your income. The way you reclassify your income, turn active income into passive income. That's really powerful. Active income into passive income. How do you do that? If you're not incorporated, you can set up an S corporation and differentiate your income. You take a reasonable salary, which isn't what you're worth, but what you'd hire someone else to do that job. And then you can take the rest in distributions, and distributions don't get hit with self-employment tax. That's 15.3% savings. Even when you max that out, it still saves you 3.2% on Medicare, Medicaid, and it saves you above $250,000 on an additional 3.7%. So somewhere between 3.2 and 15.3% just because of how you paid yourself, even if it was the exact same amount. Or we heard about captive insurance agencies earlier. I have a captive insurance agency personally. I can put money into that pre-tax. If I don't have an insurance claim, when I take that out, it's a capital gain. So I just took ordinary income and turned it into capital gain, which almost cut my taxes in half. That's reclassification of income. Other ways to reclassify your income. Let's say you own real estate, or you have a building that you're a tenant in and you own the building. Charge yourself the highest possible rent because that's going to come through at a lower tax rate than if you're paying yourself a salary. If you own real estate, that can help you reclassify your income because you can become a real estate professional, which doesn't mean licensing, it means how much time you spend on it, and you get unlimited deductions with that. There's so many things that you can do in this realm. For example, you can set up a C corporation, and if you have a new startup business or a part of your business that you have like a division, like if you're a doctor and you see patients, but then you want to do supplements, you can put that in a C corporation and you pay less tax on the first $50,000 in a C corp than you do on an S corp or an LLC. Or another way you reclassify your income. If you're the only owner in an LLC, you're not being as tax efficient as you could. What you do is you put at least a 1% partner in there, even if it's a spouse or something like that, and then you move to Schedule K, it gets taxed as a partnership, and it lowers the taxation on that. So reclassifying income is a major, major way that tons of people can save money. Like if you live in a state, anyone live in a state like California or New York, or where you're just paying a boatload of taxes, but you have clients outside of those states, you could learn about a grantor defective trust called a wing in Wyoming or a ning in Nevada, and avoid state tax on people that are from out of your state that you're serving. Now there's someone in here that loves budgeting. Who is it? It's cool. I'm not going to steal it from you. You get a still budget if you really want. But the rest of us, you never have to budget again if you do this simple thing. Go to your bank, set up a separate account. Call it your wealth capture account. Every time you free up money, every time your business grows and you pay yourself more, just make sure you're automatically paying a portion of that money into that separate account called the wealth capture. That's automatically saving money. Now, most people think they're automatically saving money, but if you're putting it into an investment, that's not saving, that's investing. And I'm in agreement with other people on the panel. Now is the time to start building up a lot of cash, because people that build up a lot of cash are going to be able to take advantage of the change in the economy. The people that are going to get wealthiest in the near term are not the ones that are chasing the stock market returns, but the people that are sitting in cash that when the stock market finally starts going down and everybody else is like, when do I sell and realize that loss? And now they get into scarcity. Now they're just trying to make ends meet, and they probably got really addicted to a better lifestyle than they deserved because it wasn't about value creation, it was about luck. That's when you can pounce and start buying great opportunities. Businesses are going to be on sale for a different level. Opportunities are going to show up. Like when McDonald's grew massively was during a recession, and they started to buy real estate that they couldn't get before the recession. When Apple started to grow massively is when they started to acquire companies during times when everybody else was cash strapped and they were cash heavy. Start to build up that cash, because rookies always stay invested. They invest early, always, and often. They're told to be mindless drones that dollar cost average, that wait for 30 years, that they're in it for the long haul, but instead professionals sit on cash and then they pounce when the opportunity is right. I want you to be a better investor. I want you to use your investor DNA, only invest in things that you know, and try to avoid the greed gland when you feel like you're missing out, because that's about the time everything's gonna start happening and turning, because that's when the mass hysteria comes in. Like, have you ever heard of tulip mania? Anyone heard of that? There was a time where tulips were the most expensive commodity in the world because of the hype around tulips.
Want to master your money? Want to figure out the things that you could do to improve your finances? Click here and check out more videos like this on Money Matters.